Recording. There we go.
The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everybody. It's Thursday, August the 16th. Just about halfway through the last month of summer, at least for the market. I know summer ends, I think, in, when does summer end, Dr. K? Is it October or September? I forget. I just go by the temperature.
Right before Labor Day, I guess. That's traditionally.
Okay, so it is the last month of summer. Anyways, so what's going on? Market continues to move higher, and I think last week we talked about this idea that the bottom line here is when you look at this chart, we can talk about how difficult the summer has been, but the bottom line is you look at the index charts, and you basically have been in a stealth bull market throughout the summer of 2012, even though it's been very difficult to play, and you've had stocks blowing up, and you've had some stocks act okay. Not always in consistent fashion every time, but you have had some stocks okay, and we'll get to that in a little bit. But what's happened that we were talking about this last week, so right, I think 5 days ago here, every time you've had a peak, you've paused for a day, maybe 2 days, and then boom, you're back to the downside. This last time, notice you held up here. This was 3 weeks ago, I think 3 weeks ago. You held up right in here around the 2950 level on the NASDAQ. For a couple days, you tried to hold, which was a little bit of improvement over the prior peak. So the market's trying to hold the gains. You come down, basically retrace half of this, come off the 50-day, and now we boom out to new highs. And nobody's really expecting this, other than the fact that the market direction model did go to a sell signal here. But as Dr. K explained, and I'll let him talk more about that later, we know why the model's been misfiring, and it's mostly due to the banding, as Dr. K refers to, and for the layman, just the range that it's been holding in has been just enough to trigger signals either way at exactly the wrong time. And if you go back to last year, August of 2011, the range was such that it triggered signals at the inflection points that were all correct. So as we had a series of bad signals this summer, last year towards the end of the year, in August and going into September, we had a period where the model hit every inflection point. So there's been a different situation in terms of the banding, but all of that speaks to a tighter range, and maybe that's more constructive in this rally that otherwise looks like hell going back and forth. And I know some of you have experienced hell in this market because things start to look good and then they come in, and they look good and then they come in, and just when you're worn out, the market's probably going to take off in one direction or another. Now, what we've seen recently, getting back to my original point, is that the market has been able to hold up for a few days and consolidate, and volume isn't, it's big, it's not really drying up. Here you did dry up a little bit, it almost looks like wedging type action. The next day you pick up some volume here, so a little bit of churning distribution, but you realize you are coming up into this level, so it would not be surprising to see a day where you have that occur. What I think is key is what sort of follow-through is there one way or the other, and what we're seeing is follow-through to the upside. Are we trading higher volume right now, Dr. K?
Last I looked, I think we were about even. Let's see how we're doing here. I mean, the volume's been so light that I wouldn't be surprised that if we're trading higher, not that it would mean very much compared to yesterday's volume.
Right. So I mean, so we're moving higher, and the market continues to move higher, and that's the bottom.
We're actually we're quite a bit higher on volume
so we're
today.
Moving higher on higher volume today, so that's constructive.
So this is actually a good sign. I think also that the market finally took off earlier today on some volume. So that speaks to a very constructive action that we might be leaving this sideways consolidation to the upside at last.
Yeah. So market direction model is on a buy signal, and it's interesting that I think it just shows that the maturity of the members that we have on Virtue of Selfish Investing website as traders. I think we've gotten rid of all the crybabies and the whiners and the people who really, in many ways, are not psychologically mature enough to trade, because you run into people, as I've talked about before. The market direction model issues the signals that it issues. We don't make them up. Okay, I know people think we do, and sometimes maybe if you want to fantasize in your head based on the action that you see and the timing of the signal, that some other decision was made based on some other criteria. But the model is what the model is, and it issues the signal it does. But you will see people come at you as if you do it on purpose, and as if every bad signal that loses money for somebody who's a member of VOSI is going into your bank account, and I can tell you that if you guys are losing money using the MDM, so are we, because we do run an account that uses it, and we are down for the year, but that doesn't throw us. We were down pretty good last year at the beginning of the year, and we came out ahead pretty well. So we're going to stick with what we're doing, but we do mitigate the risk here, and that is if you know you're getting a series of bad signals, then you can edge in if a trend starts to gather some momentum. And again, you're not really worried about, and the whole point of the model is not to catch even this move from here to here, or this move from here to here, or this move from here. That's not what the model is supposed to do. What you want the model to do is catch a move that is going to be something more like this, okay? And that's really where you're going to make your money in the market direction model. So that's what we're looking for here, and we'd like to see this thing break out and head higher with some vim and vigor, so to speak. S&P, New York-based index, heading for the highs, very close to the 1422 high, and moving higher again today on higher volume, right, Dr. K?
Yes, about 11% higher on the S&P and high 20% on the NASDAQ.
Yeah, so it's looking pretty good in terms of the volume. Dr. K, do you have any specific special comments to make about the market direction model?
Nothing new, really. I mean, it's all nothing new outside of what we've said in our pre-market pulse reports. And there's nothing really much to say here, except that it's been excruciatingly slow the last few days on low volume, and but constructive, because the banding is constructive, and we're seeing that banding in a number of leading names as well. So that's all good, and the higher volume today speaks for potentially a continuation of this uptrend.
So then bottom line, Dr. K, is that we have a buy signal on the market direction model right now, and so far, so good.
Yes.
Okay, great. Good to hear, because I'm longest market, and I believe probably most of you are, and so is Ross, Haber, and Dr. K, of course, since we all work together. Ross will come in a little bit slower here and let the market work its way out, work its way higher, and confirm the move. And so he comes in a little bit slower. We've been a little more aggressive this morning and yesterday, actually, coming into some stocks. And I'll just talk about some of the things that we're looking at today. I thought yesterday Tractor Supply has had this big gap up, and it's getting real tight, and the volume's drying up. So this looks like it might try to come out. I'd watch for a pocket pivot coming out here. Let's see. You got to be forget about today. So we go 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Here's the 10th day out. So what's the highest downside volume right here, which is 575,456 shares. So you get a move up to the 10-day on volume that's higher than that. You've got yourself a pocket pivot, so I'd keep an eye on that. RAX is another one that's similar to TSCO in the sense that it had a big gap up after earnings, but there were clues beforehand. You get a little pocket pivot here coming up off the 50-day, and then, of course, here's the move on earnings. And this is actually, I believe, the day of earnings here. So the stock is stalling about in a logical area around 50 where you'd find some overhead resistance in the pattern. But it's able to gap through that. Now you're working through some, let's see if I can make this a little bit bigger. You're working through some overhead here, but I think the stock probably is headed for the 58 level from here. Again, you're looking at a pocket pivot. Yeah, you're extended from the 10-day, but I'd almost watch, based on this being a viable gap up, if I saw some pocket pivot volume, I'd consider that constructive here myself. Do own the stock here, and it's up 68.7 cents right now as I speak. Another one that was interesting, Amazon, originally we bought into this breakout here, and the stock kind of flopped around, came into the 10-day moving average. It did hold roughly on a closing basis what I would consider to be the buy point. I don't consider 230, what is the high here, 233.84, which is the peak on the left side of the base, as my buy point. I consider this to be the buy point here because it's once the base is formed. This is the low point on the right side. That's what I'm looking at as my breakout point or my pivot point, breakout pivot point, okay? And you can see that, in fact, the stock pulls right back to the 10-day, tests this breakout point, and closes above the 230 level. Now, it doesn't go anywhere for a while, and a lot of times, in the way we operate, we'll come into a stock, and if it doesn't really get anything going, we'll go out. And then we'll wait, and we may end up buying it a couple, 3 points higher later on, but if it does come out again, usually the second time around, you're going to get a little more push on the upside. So what we're looking for now, and I'll tell you guys, I was doing my usual Livermorian type of test the market. Yesterday I decided to try shorting Amazon because I saw this volume pick up 3 days ago on Tuesday where it tried to go higher and it reversed. I'm thinking, okay, maybe this thing is going to break. The market stinks, and everything's going to break down, and all these breakouts are going to fail. So I think I'll short some Amazon here. And so I come after it, and Ross remembers because I was talking with him about it. And I thought, let's test Amazon here. So I went short the stock, and it looks like it's going to come down. It comes down a buck maybe. You know, and then what happens is I notice, and I don't know why I operate this way, but I have to have a position to feel things out. Maybe, hopefully, some of you, if you're different, you can just watch a stock trade, but I really have to feel it viscerally, and somehow it doesn't really register with me otherwise. And so I'm willing to take a small loss to find out whether this thing has better upside potential. So it holds in here yesterday and holds a 10-day, and it starts to push back up out here. I just turn around and go long. And holding it long today, it's moving higher, so I've made up for any tiny losses I had yesterday testing it on the short side. But it did feel sort of resilient, and it seems that everybody does hate Amazon. It is allegedly overvalued and a ridiculous business to own and not a good investment. Whatever, maybe it isn't a good investment, but it might be a good stock, and it might have a decent move higher from here. But it seems to me like at this point it should come out of this little flag and just continue higher. So own it on that basis. I like Mellanox also here is holding along the 10-day moving average. So if you bought into this, and you guys remember I was buying the stock in here and playing it out, but let it go too soon because the market scared me, and it's gone higher, of course. So what I might look to do, since there is a little bit of cushion from the previous position, the way I would look at it, based on the way I handle the stock, you might have handled it differently. And if some of you still own it, then I say more power to you because you're in a great position right here along the 10-day moving average to pick up more shares on a continuation pocket pivot. And, of course, that's going to have to be higher than, I believe, let's go back, 1, 2, 3, 4, 5, yeah, higher than this volume here. So you're looking for volume in excess of 866,308 shares. And that would be your pocket pivot coming up off the 10-day moving average, and that's where you would want to add. LinkedIn is a controversial stock around here. We talk about it every day, at least Ross and I do. I was thinking it was coming into the 50-day, and you're seeing volume drawing up here, and that it would try and bounce off of there, because it makes sense that given this kind of move, this is such a very sharp, wild upside move that it has to just consolidate a little bit or kind of digest this. And I think this whole pullback is somewhat typical of LinkedIn based on prior strong moves it's had. The other thing is that you notice it does tend to be, as Dr. K likes to say, porous around the 50-day moving average. It flits back and forth. So using the 50-day moving average per se as a guide, a selling guide, it might throw you off because every time it's violated, it has launched back to the upside, but of course every time it's tried to break out, it's come back in. But what we're thinking here is that it's possible that this is going to fake everybody out, and with this 10-day moving average, the pink line moving above the 20-day, that might be telling you, and it's doing so sharply, that this really will be a fake out, and this might be the spot to buy shares. Now, if you were going to do something like that, Dr. K doesn't necessarily like to buy that way. He prefers to some sort of confirming strength with the idea that if this isn't working now, something else has got to be working better, and he'd rather be in there. And that's a valid point. Like, I'd rather be in Amazon today than LinkedIn. But that said, it is possible for those of you who are psychologically attuned to, say, buying pullbacks rather than buying abject strength. And I would say that oftentimes in this market environment, that really has been the way to operate. You look for strength, and then you wait until it comes in, and then you buy, begin to nibble and take a small position based on a pullback or weakness in a stock that was previously strong. So buying weak pullbacks, normal weak pullbacks, or weakness in a stock that has shown previous strength. So let's see, PCYC is coming out to new highs, breaking out. I think they still have to announce earnings, don't they, Dr. K?
They're announcing, I think, in early September.
Okay.
That's right, early September.
So still, but stock going higher. This looks climactic, some people might say. But you know what I would note here is that you didn't really have, well, you had a number of days straight up. You don't really have that big upside, exhaustion move where you're up a huge amount of points. This actually wasn't the biggest point move, and it wasn't even the biggest percentage move. This was here, and that wasn't the top. So, we've seen some of these, they look like climax tops, and they set up again and go higher. I don't know if you'd call this a flag. This is what it looks like on a weekly chart, but you can see it's just a little, almost a cuppy little handle thing whatever you want to call it, and it's trying to break out again, but there's no volume on the stock. I don't think there's any volume on the stock today. So
it's pretty.
It's light. So that's kind of cautionary. Now, the story of the day, I think, and the opportunity of the day, in my view, and we've been buying this one on this pullback, is Kors, Michael Kors, for a couple of reasons. And number one is that you see the big move, and the only way you ever caught Kors at the beginning was through the magic of pocket pivots, and much to our own chagrin, we never bought the stock. We just sat there with our fingers up our you-know-what watching it, but we do know a number of people who did buy it, and they have had a great 2012 so far as a result of being long Kors and selling it on a violation here. Now, if you played this move on the pocket pivots and the gap up here, and there are a number of pocket pivots in here, and then this gap up. Now you have this big base, and now here's your second shot to come after it again, because technically this is a first stage base. And it has a little bit of this, what I call this nest kind of look. You know, there's a lot of wide ranges, but I think after a stock has a very strong move like that, and that's a very powerful move. That's a double in about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks' time. That's huge. And so it does, you know, it's going to fly around. There's a lot of stories of economic weakness. You have some retail stocks getting clocked, like Lululemon Athletica, which is a high-end stock, you know, a high-end retailer getting clocked. You've seen Coach get clocked as well, and that's another high-end retailer. Now there's talk that Kors is taking over the high-end retail market for from Coach and taking some market share there. So, you know, that's a big breakout, and I think that all of this kind of wide action, I don't know if I can get this to shrink a little bit here. We'll do this. Let's make it look a lot tighter. How's that? That looks better, doesn't it? But you know, this looks okay, and I think with this Bible gap up, you can buy the stock here. Now, you got to remember, you have a couple of factors working against the stock just in the short term, okay? And the first is that you're coming straight up off the lows of the base. You did have a pocket pivot reversal type move off of the 50-day going into earnings. And I believe they announced earnings in the morning 3 days ago on Tuesday, and that's what caused the gap up. But you do have some overhead from the left side of the base. So you would expect that to come into play. And so knowing that, our approach is to just let it come into this 48 area, and we're just going to pick up shares as it comes in, just stick an algo there and let it catch the shares coming in if you want, if you have that capability, I suppose. But you should allow 2-3% porosity, possibly down into 47 on a pullback, because I think that it could just continue higher, it could build a handle. But I bet you, if this is a first stage basis stock, could go higher, and it could be the Lulu of 2012. Now, we don't know that for sure, but so far you have to go with the technical action, and the technical action dictates that, yes, this is a viable gap up move, and you use the low of this day here, which is 47.74, plus 2-3% to allow for some porosity, which is also normal, I think, given that you have a little bit of overhead. But I don't expect this to last very long. So use these pullbacks to buy your shares now, in my view, and be prepared to sit back for another 2-3% if it does dip. And you can just size your position accordingly, So we'll come in pretty heavy on this one ourselves because we feel like we have a tight stop, so we can manage a big position coming into this. Regeneron, pharmaceuticals, biotechs have done pretty well, and so they might be a little bit too obvious. This one's just sitting up in a base. You can see here, I'm going to make this really tight. Look at how tight that base is now. Now we'll make it loose, okay. You can see here, though, you got a series of very tight closes. We've still got another couple of days in this week here, but you see the same thing occurring. You also notice you closed up off the lows of this week, and so far it looks like that's going to happen this week as well. So, if you bought into this one either on this pocket pivot, you're either looking for a breakout. I kind of like the weakness the other day where Roche announced that they had approval of their drug for age-related macular degeneration. I actually know someone who had that. Interestingly, Harry Wayne had that. And knowing Harry, I get to know all about age-related macular degeneration. Harry Wayne, you might know, is a good friend of mine. And I met Harry when he was a broker at the age of 86 at Merrill Lynch in Beverly Hills. Harry Wayne was the president of Hayden Stone, not the president, but the manager of the Hayden Stone office in Beverly Hills, or I believe West LA on Wilshire somewhere. And he hired Bill O'Neill. So that's how I actually ended up meeting Bill. But in any case, I got to learn about age-related macular degeneration. Sure, as Harry said, this really sucks. and it'd be hard for him to see the screen and everything, so he eventually had to stop trading at the age of, I think, 90, and I think he died at 92. But in any case, they have a drug for that, and Roche came out with a drug, and one of the factors cited is that Roche's drug is cheaper than Regeneron's drug, Eylea, it's called, EYLEA, and the stock sold off briefly on Monday, and it's come back, and it's sitting tight in the base right now. So I like that stock as well. A couple others, Alexion is trying to hold up. You can see this had a breakout here, strong move here. It's pulling in and holding tight. It looks okay. It looks okay to me. Let's see. Other stocks that we're looking at. Now, the building area has been strong, and so you've seen lumber liquidators. This thing's very tight flag in here, and looks like it wants to go higher. I note another one, Fortune Brands Home and Security, had a pocket pivot 3 days ago. The one thing, Dr. K, we've talked about this one, but you haven't really cared much for it, and I have to admit I don't really either, and a lot of it is due to this sort of bizarre action. Is that right?
Yeah, it's been very choppy, but what I do like about it now more than before is that this choppiness has been fairly consistent, and so if you have consistent choppiness, then it improves the overall tone of the base. So yeah, I mean it's got some other flaws in it that don't make me all that excited about the stock, but the technical action is looking better than it did before.
Yeah. I mean, it's telling you, the strength in the home builders. You've seen, I mean, these are cheap stocks. I'm not sure I want to buy them, but you can see on the weekly chart of Pulte Home. Ross Haber likes DHI, D.R. Horton, and that's acting okay. Toll Brothers, tried to break out, came back in, and now it's trying to break out again. So you are seeing some strength in a number of the home building stocks and the home building related. So Home Depot even with a gap up. Dr. K, was that a viable gap up? I guess
that would fit the definition of viable gap up. Yes.
So why didn't we put it out as a report?
Because basically these kinds of stocks. First of all, Home Depot, if you look at the earnings and the sales, they're slowing appreciably, and that's in this kind of market environment. You really want all the ducks to be in a row, like I've said before.
Yeah.
So in a better market environment, this might have been passable, maybe. Although that the slowing in the earnings and sales is not real attractive, so it might still not have made the cut.
Yeah, I think I would be more inclined. I like this one better. It looks way up there and hard to buy, but this is actually a very powerful move, and this is a nice flag formation. And it's you didn't get a pocket pivot yesterday because you're yesterday you're 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. So this day was the volume you had to go against, 840,316 shares. And you only came in with 699,611 yesterday. But who knows? Maybe it's just going to continue higher. There is some pretty decent short interest in this, I believe, maybe about a quarter of the float. So it looks like it wants to go higher. But there's that. And maybe this one works too, and probably it works because we don't like it. So that seems to be the case in many cases. What we think doesn't matter. I want to answer a couple of quick questions. I know people have been looking at InventSense. You get this big move, and it's coming around, but I wouldn't. And if you'd like to buy this, maybe you could buy it here and use the 13 area as a stop. I don't know, but it's not something we're going to buy. But
too much risk.
Yeah, they're coming up. So is the rest of the market. Big deal, and they're not negative earnings growth now. Fusion IO. Strong situation, but again, not necessarily the best earnings growth, negative 40% earnings growth and 9 cents a share. Next quarter, they're looking for negative 52% earnings growth on 7 cents a share. So, despite the fact that this is a nice big gap up, I'm not that excited. So I think I like
both of these stocks, when it comes to these sorts of names with good stories, if they're going to prove out, you're going to see it on the chart. So something like INVN, what I'd like to see is, let's say it gets up into the high teens, and then it issues a pocket pivot after some constructive action. Then I would probably get interested in InventSense.
Yeah. So so it doesn't really thrill us. So, but if you buy and you make a bunch of money, you can come back and thumb your nose at us. We'll be happy for you. FleetCor Technologies. That's not a bad-looking name. It's kind of a big gap up. Reminds you a little bit of the RAX gap, and it continued higher to new highs. So it's acting okay. Is this a credit? Yeah, this is a credit card payment services, I guess, for commercial fleets, oil companies, and petroleum marketers. Interesting. It looks pretty good. It has good earnings, has good return on equity, all that nice stuff. Group rank is number 57, but it seems like it's in a area all to its own. So this doesn't look too bad. So I don't know where. If you wanted to buy this stock today, where would you buy it? Would you buy this breakout?
It's a little, yeah, it's a little extended. Could be bought. I prefer to, on something like this, it had a gap up, and then, yeah, the earnings and sale, everything on this thing looks pretty good. It's not, that doesn't blow me away, but if you want to get a position in this, maybe buy a half position here, and then if it pulls back constructively, you can get another position.
Yeah.
And just leave it at that.
Coming straight up off the lows here, that typically that's risky, but in this environment, maybe that's the sort of thing that works. I think a lot of the can slim type technical rules are getting thrown a lot, and I think that there are algos that trade against them, so I do think you have to be a little more crafty sometimes in your approach to buying, but this looks fine. So anyways, let's see. Rentec, I know people like, this is acting pretty well. It's a really thin stock, though. That's been my reason for not buying it, and it's pretty volatile. I think if I was going to play fertilizers, I'd prefer to play Agrium, which had a little pocket pivot couple days ago here, I think yesterday. This was a little pocket pivot, and you'll notice Consolidated, or CF Industries, is also moving higher, and stuff stocks have been doing pretty well. Remember last week we talked about this idea. Some people were asking, I'm just going to throw up the not the S&P, but the transportation index, that the trannies were in a downtrend while the market was moving higher. So in other words, they're not confirming, and they're actually diverging, and is this trouble? And there's a couple of points I would make. Is that, number one, I think the Dow index and any of the related index that are so narrow, especially the transportation index, the economy is much broader these days than it was 20, 30, 40 years ago. And I think Dow theory is a bunch of bunk. Personally, that's my own feeling, and sorry to anybody who uses it, but that's just my feeling, so I don't use it. And I think it bears out in the evidence that you can't really rely on this when it's diverging from the rest of the market as a sign of weakness. And even if it is, it looks like you're having a little trend channel breakout if you can get through these peaks, which I think it's trying to do right now. Let's just draw the line for fun. I can't help myself. Yep, see, look at that. There's a trend line breakout. I'm all over the trannies now. But that said, okay, the trannies index, supposedly if it's weak, it speaks to underlying economic weakness. Sure. What I would be watching, look at the actual rails and the big rails, which I think rails are definitely an economic indicator, and I know there are guys who watch the shipments coming into the major ports and the railroad loads and how many there are and how big they are and how much they're carrying and blah, blah, blah. But you see it in the stock. Let's actually, we can't use
Actually, I want to make one point on the tranny index. In July of 2011, it was ahead of the other indices. And we all know what happened in August.
There you go, kaboom.
And then in February, or actually in January, I think, well, right around end of January, early February, the transports topped. But it was another, the markets continued to rally actually all the way up until the end of March. So you would have lost out on some potential gains there if you were, say, playing some. Well, one or two stocks that actually had a nice trend in that period, like Apple.
Right, and wasn't the transportation index breaking out like that? Wasn't that presaging economic strength? Well, no, it doesn't tell you anything, and if you rely on it, woe unto you. Now, and then we can just kind of break this down. Let's use a little bit of common sense here. First of all, let's just look at, say, UNP, Union Pacific, big rail. You got a pocket pivot here yesterday coming up through the 10-day moving average. I also noticed Kansas City Southern doing similar action. So these are actually moving with the market, and they're acting well. So, I think you have to open your eyes a little bit, and I think things like Dow theory are just way too narrow for the modern age where the economy is much, much broader, and there are so many industries, and there's so much more creation and destruction going on in other areas that are moving so much more quickly, such as technology. So, and as far as economic indicators, I suppose we could look at Apple. And some are perplexed by Apple because it just continues. It broke out and continues on no volume. My view is you may come up here, form a handle at the 640 level, and then if it's able to break out, you'll see some volume come in, and that will probably be when you want to be all over Apple. But a move from 620 or 610 to 630 is 635 is 5% or so, 4 or 5%. I can get more juice out of something else, I think, in the meantime. But of course, Apple being healthy here is probably good for the market, and nobody really wants to sell it, even as nobody really wants to buy it. But right now it seems like a few more people want to buy it than sell it, therefore it continues to go higher. And it may need to pause here. I thought the other day's action, you saw a pickup in volume on Tuesday, and you saw it reverse a little bit. That seemed normal to me. It's probably going to go higher with the market, but the idea is, what becomes a bigger mover on a day like today when you see Apple up 0.78%, but conversely, maybe Amazon's the one that's showing better volume, and it's pushing now through the 240 level, a couple, well, at least a buck higher or so since I started talking about it at the outset of this webinar. So, that's kind of what it becomes. Europe just closed up. That's good. TQQQ is moving. Yes, we own it, so we know that. People like the new morning report. And so we did want to start putting that. I'm just curious, Dr. K, should we be putting that out to the general mailing list or only subscribers?
The way, as
I think these people are getting something for nothing.
No, I think everyone's getting a good value. However, as we have pointed out in the general report, we will, there's actionable names that we don't include in that report that only our members include. That's really where you're going to be making money on the actionable stocks that we're going to be putting out in the form of pocket pivot review reports, viable gap up reports, obviously market direction model, all those members only reports. That information will never make it into the pre-market pulse. Pre-market pulse is just designed to give someone an overview on what's going on, maybe provide some clarity as to market direction model and market direction in general, and also talk about some stocks that we wouldn't necessarily play, but that are reporting good or bad depending on how they're affected by slowing economies around the world. So it just provides some color and a big picture, 50,000-foot view to all our subscribers, both members and non-members.
Let's see, going through some other comments here. Somebody says maybe the whiners just don't understand what trend following is all about, and that is true. So, but I also think that the bizarre behavior of ascribing some sort of sinister plot and getting all emotional about it seems to me almost bizarre. But there's a certain percentage of the population out there that is psycho, and so I suppose when you're running 5 figures, or what do we run? 4 figures of subscribers, you're going to run into a couple of nut cases, and you do.
Yeah, I saw a TED Talk actually on this concept about psychopaths, and I guess statistically 2% of the human population are would fit under that category, and the speaker said that there's 1,500 people at this TED Talk, so he said there's probably 30 of you are psychopaths. But he adjusted that number. He said, well, actually, it's probably more like 60 of you because CEOs and captains of industry often exhibit, borderline psychopathic behavior. So he adjusted his number to 40. And it's being a psychopath, a totally deranged psychopath, makes you non-functional. But as we all know, being borderline psychopath, borderline schizophrenic, can sometimes really result in some levels of genius-like behavior.
Yeah, such as in ourselves, right, Dr. K?
Probably.
Yeah, I'm just psycho. All right. Let's look at, I think gold is interesting here. And for those of you who follow the simple commodities buy signal of the green 20-day moving average moving above the 50-day moving average, that is a buy signal for gold in some corners of the trading world. And so you're actually seeing the GLD moving up, and maybe it is coming around. And you do see this reverse head and shoulders. I don't know if it's valid or what. All I know is, okay, the 20-day is crossed above the 50-day, and that is a very simple buy indicator for the precious metals. Now, silver is just starting to see the same thing. Okay, so And someone's asking, what do you think of silver and gold? I think they look ready to turn. I would love to see some further evidence of this in terms of volume coming in. And I'm not sure. Let's take a look at the futures. If you look at the nearest futures contract, you're not really seeing volume coming in there, and you're not really seeing any volume coming in. Well, you are seeing some here, and on a relatively a little better in the gold, but it seems to be arguing for more QE, so of some sort. In fact, there was a Fed head today. I can't remember the name, but a very unusual name, not one you would expect to see for the Fed, but given it's generally all white males over age 50, I suppose. But somebody was saying that the Fed might raise their inflation target